All right, welcome to The Explainer. Today we're digging into a really powerful idea. It's about how a couple of huge tech shifts are sparking this massive economic revolution. I mean, we're talking about something that's changing everything, from what your job is worth to how our financial markets even work.
Okay, so let's jump right in. It all kicks off with this number, a number so big it's kind of hard to even wrap your head around, $125 billion. And get this, that's just what Alphabet expects to spend in 2025, and they're already saying that number is probably going to go up in 2026.
And look, this isn't just them buying some new computers. No, this is a statement. It's a sign of total conviction from the biggest companies on the planet. They are in an all-out arms race to build the entire foundation for AI. And why? Because of what they're calling insatiable demand.
So this crazy spending spree, it's kicking off this whole chain reaction that leads to a pretty wild question about our economy itself. What if AI is basically the new money printer? You know, like quantitative easing, but instead of printing dollars, it's just churning out pure productivity. All right, let's look at the first domino to fall here so we can see how this all connects. The sheer scale, the massive amount of money being poured into AI infrastructure, that's the spark for everything else. And this isn't just a story for Silicon Valley. We're talking about a global industrial-size buildout.
And like I said, this goes way beyond just the big tech names. The actual physical construction is giving a huge boost to old-school industrial companies. Think about it. When a company like Caterpillar sees its stock jump 12% in one day just because they're selling more generators for data centers, well, that's when you know something fundamental is shifting in the economy.
Okay, so this incredible build-out leads us right to the next domino. This one's a little more abstract. It's what's being called a deflationary shock, and it completely changes how we value human work. Yeah, we're literally talking about the price of thinking just collapsing.
Now, the key thing to get here is that this isn't about your TV or your car getting cheaper. This is about the cost of all the stuff that happens behind a computer screen. Research, analyzing data, writing code, you name it. That cost is just plummeting, heading straight down towards zero. And this comparison, it just lays out the shift perfectly. You've got jobs that used to need expensive, human experts. Now an AI agent can do it for pennies. And not just that, it can do it instantly, and it can scale up exponentially. It's just an unbelievable boost to productivity.
Which brings us to this really powerful metaphor, that AI is basically the new QE. It's like a massive stimulus package for the economy. How? Well, by slashing business costs and cranking up productivity, it's basically creating value out of thin air, or out of efficiency, I should say. It's a lot like how QE pumped new money into the financial system. But here's the flip side. The fallout from this, this cognitive collapse, it's creating a really harsh reality for a lot of human workers. All these amazing efficiency gains, they're not being shared equally, and it's leading to what some are calling a pretty dystopian phase for labor.
What we're seeing is this really stark K-shaped economy. You've got real wage growth, which is basically flat, growing at just 1.4%. And for a huge chunk of the population, the only thing keeping the economy afloat is a 9% jump in government support payments. That's a huge divergence.
And you can see the brutal truth of it right after ChatGPT launched. Look at this divergence. Corporate profits are just soaring, right? All thanks to AI making them more efficient. But at the same time, look at the demand for temp workers, which is usually the first sign of where the job market is heading. It's just fallen off a cliff.
So what are companies doing? Well, they're acting rationally, right? They're choosing automation over hiring new people. Amazon is the perfect example. They're laying off tens of thousands of corporate workers, but at the exact same time, they're saying they can't keep up with customer demand. So what does that tell you? They don't need more people. They need more intelligence. Okay, so you've got this new economy. It's super high speed, it's automated, you've got AI agents talking to other AI agents, and it just can't run on our old, slow, creaky financial system. It just can't. It needs brand new plumbing. And, you guessed it, that's where crypto enters the picture.
And here's how this whole transition could happen. It's not going to be some big government announcement. Nope. It's going to happen quietly through an app you probably already have on your phone. Think about Zelle. By just adding stablecoins, those are the digital tokens tied to the dollar, they could instantly upgrade the whole system for like 80% of all US deposits. Bam! You've just created a high-speed railway for a new tokenized economy. There's a brilliant analogy for this. It's like the dark fiber. Back in the dot-com boom, companies laid all this extra fiber optic cable that just sat there unused. But then, it's what made Web 2.0 possible. Well, the crypto infrastructure that was built over the last few years, that's the new dark fiber. It's all just sitting there, primed and ready for this new AI economy to flick the switch.
So what's the last piece of the puzzle? Well, the final consequence of all this speed, all this efficiency, all this disruption is that the stock market itself is completely changing. It's becoming less and less about patient, long-term investing and a lot more about, well, something else entirely. What we've seen is this absolutely unprecedented explosion, what's called zero DTE options trading. That stands for 0 days to expiration. I mean, these are literally bets on where a stock is going to be by the end of the day. Just look at that vertical spike on the chart. It's insane. And all this activity is turning the market into this super high-speed, super volatile casino, where short-term gambling is the name of the game.
We've got a whole new generation of traders who are not in it for the long haul, not at all. They're using these options to make these huge leveraged bets on what the price is going to do in the next few hours. This isn't just a trend, it's a fundamental structural shift in how the market even works.
So you take this new market structure, and you combine it with the fact that hedge funds are more leveraged than ever. And what do you get? You get the perfect storm, the perfect conditions for these massive, coordinated squeezes. A lot of people are saying we could see another GameStop, but on a scale that would make that look like child's play. And this is where it all comes together. The crucial point here is that all these different threads, the AI build-out, the job losses, the new market structure, they're all connected. As AI continues to replace jobs and totally rewire our economy, the need for a financial system that's faster, cheaper, and open to everyone, while a system built on crypto, it stops being a nice-to-have and becomes an absolute necessity.
And so that leaves us with one last big question to think about. In a world where intelligence itself is basically free, where AI is remaking everything, we really have to ask ourselves, what's actually valuable anymore? What skills, what assets, what systems are going to matter in this completely new economic world?